Okay, it's Monday the 8th of March. It's nearly 10 o'clock at night. Don't normally do my videos at this time of night, but there's a lot going on. Right, I've been bullish of the dollar for a little while. We've done quite well on the long dollar trade. Looking at the euro versus the US dollar, and we are hitting quite a good support level. Not a fib level. I would like to have seen it hit a fib level, but there is a decent trend line going back 3 months. And we have got, oh look, we've just switched on to the next day as I speak to you. And we've got the 200-day moving average down here at, we'll call it 118.30. So I'd say 118.40, 118.30 looks like a good support level on the daily chart. And we are getting oversold. And don't forget, we are actually still in a bull market. We have been in a bull market since March. So although we've had a big correction, we can still say that we are in a bull market. Would like to see a trend line going up. That would also give me some confidence. Unfortunately, I don't have that. But a trend line, moving average, and an oversold situation indicates that we could have a bounce. Even the weeklies are getting into oversold territory. Right, this is a weekly chart, and this is really what's convincing me more than anything. A trend line going all the way back to, where is it now? Well, here we go. Right, going back to 2011. This is a big trend line. Now we broke above it, and we have come back to retest it. You can see that. This, I think, is worth paying attention to. Again, I wish I had an upward sloping trend line, something more, but I think the fact that this is such an old trend line, 10 years old, is it? Did I say 2011? I think I did. And the other stuff that I've shown you on the daily chart, there's nothing on the short-term charts really, but I think this is a good enough reason to definitely exit shorts in euro US dollar. I think that's probably run its course, and maybe we can see a strong bounce. So I think it's worth trying along, don't you? So how does that tie in with the dollar index? Well, as I sent out in my updates on my Telegram channel, we do have some resistance, 23.6% fib. So that's the whole move down in the dollar index from March 2020, the big move. 92.45, let's call it. That's where we have resistance today. We've been up to 92.42. So we are testing that level most definitely. It's just below the 200-day moving average, which is at 92.91. It's descending slowly. Okay, I can't rule out us testing that, but we have to consider that Fibonacci level is important. Don't think we can say that this marks. Well, we can say it's still in a bear trend. I guess this could be a bounce in the bear trend, although I still maintain that I think this is the beginning of a bull trend. We will find out if we reject this, then we'll see how far we come down, and then depending on where we bounce, I'm going to have hopefully a good guess as to whether this is the beginning of the bull trend. I think it is. So, for example, if we bounced off 91.30, 91.20, that would be an indication that the bulls are starting to get control of this market. But I do think there's a strong chance that we turn around from sort of 92.45, 92.55, and to unwind what is becoming an overbought situation. The bears will not have given up very easily. They have been in control of this market for quite a long time. Not really seeing anything significant on the weekly chart. Cable, I don't need to say too much because I've already shown you that we're testing some big trend lines going back. We can call that nearly 2.5 years. This one goes back a year, and so you can see lots of support there, and it kind of confused me a little bit, I suppose, in my video over the weekend, because I just thought we should go lower on Monday, or at least I thought the dollar would go higher on Monday, but we haven't sunk at all. In fact, we've held above last week's high, low. Last week's low is 137.77. We got down to 137.98. So my theory that this trend line would be significant certainly worked on Monday today, and I think we're gearing up for a bounce now. 55-day moving average at 137.66. We haven't quite touched that either. Very minor trend line going back a couple of months, 3 months, and that seems to be holding. We've got a bit of a 23.6% fib here at 138.20, and obviously that's held today or close to it. We seem to be trading around there as I speak, at least. So oversold on the daily chart, and definitely still in a bull trend. I think we have to try along in cable and see if that is we don't even have a double bottom to go on because we haven't even tested Friday's low. So I think this looks pretty positive for cable. Right, Aussie dollar is obviously still in a bull trend with the correction that we did expect, I have to say. Now we've held the 38.2% fib shorter term one at 76.22. I have that as a buy level on Friday, and it's worked. Again, today we've held above that level, just as we have done in cable. There's a bit of a trend line going back about 3 months. I can tell you that on the 4-hour chart, we've got a decent moving average, which is lending support to that level as well. So we've got 3 things going on here, plus we're getting oversold in what is still a bull trend. So to me, Aussie dollar looks like it could well bottom out and we could see a run up. Now, the question will be, is this the left shoulder to a head and shoulders pattern? Will we now form the right shoulder through the end of March and then break the neckline for a sell signal? That would be nice, nice easy pattern to trade. We'll have to wait and see, I don't know. But for the time being, I'm going to gamble on a bounce off what I think is a good support level. We'll see how far we go. New Zealand dollar, I don't really have a strong argument for a bounce in that. I guess I could say that we've tested the January low, 70.94. Where did we get to? 70.98. So that's held. Those swing lows in January. It's a weak argument, really. 100-day moving average is at 70.70, so that's a little bit further down. We haven't got quite that far, but the fact that we're holding above it is a bullish argument, I guess. 38.2% fib at 71.15. We're just holding above that now. So I guess I could give you those weak arguments for a bounce in the New Zealand dollar, but we are still in a bull trend as well. But I would be less keen to buy this one. We're also getting a bit oversold, so that helps. Now, US dollar versus the Canadian dollar. We didn't get the rally that I expected off the stronger dollar. So the Canadian dollar clearly is pretty strong. Now, the trend line, which is going back to May 2020, so we can call that 9, whatever it is, months. And the 55-day moving average, which is around 27.00. These are holding. And look, when we've hit it, we've got these long upper wicks. In fact, we've got 1, 2, 3, 4, 5 dojis really, or 5 days when we've closed almost unchanged, and then we've got the shadows up and below. So the bulls and the bears are sort of having a little battle there, and no one's gaining control. I think I'm going to have to stick with the downtrend. The fact that we couldn't break higher, even with a stronger dollar, we're now not overbought, but we're up at the upper end of the stochastic range. So I think it's worth betting on this turning lower now. The bulls must be giving up. Short term, there's not much to say. We have a bit of a moving average around 127.00 on the 4-hour chart. But so my argument is that with a strong dollar, the dollar couldn't beat the Canadian. So I would have thought if the dollar weakens, as I think it might, it looks like the Canadian dollar could sink quite heavily, actually, if people are selling the dollar across the board. Right, now, despite the fact that I expected a strong dollar in recent days, I did suggest that the 1680, 1685, 1680 level would hold in gold and would be a strong support level. And it really has. Even today, with some further losses, we've only got down to 1676. We really would have to get below 1666 this to be a sell signal. And then we can test the 100-week moving average, which is down at 1647. Oversold on the weekly chart, as you can see, heading into oversold territory. Severely oversold now on the daily chart. A big red candle yesterday. Well, it's not really yesterday yet, but for some reason my time seems to switch over at 10 o'clock. Anyway, big red candle, so that is not bullish. But there's your trend line again, 1668. It comes in 1669 for tomorrow. Rising 500-day moving average. I think that's a good enough argument to buy this. We've got a short-term 61.8% fib at 1688, so a little bit above the 1680. But this really, look, this weekly 38.2 is huge. This goes all the way back to, let's have a look at it again. This goes all the way back to 2015. The big swing low in 2015, you can see that we come down and then bang. So it really is a long-term fib. That and the trend line alone, I think, is a really strong argument for gold, which again still is in a bull trend, has been since 2015, late 2015, beginning of 2016. This still can be classed as a correction in a bull trend, and we know just from social media that there are lots of gold bulls out there waiting to buy. Maybe this is the chance. So we might just be witnessing the end of the correction in gold as I speak. Right, now oil. I warned about the 500-week moving average coming in at 66.40. Now we went above there. We got as far as 67.98, so we really overran it by 150 or 160 ticks. Now, fortunately, I personally wasn't trading these. I don't know whether you did, but I sure would have been stopped out. Probably would have even been thinking about a long position. But Anyway, I didn't touch it. I wanted to wait for some sort of confirmation. Look how overbought we are even on the weekly chart. We've really, really had a great run in oil. And we've got some sort of negative divergence, I can argue, here on the stochastic. You can see that, new high, and not seeing that on stochastic. Not massively important, but still worth paying attention to that. Now, we definitely do have what looks like a negative candle here. Normally, I wouldn't get too excited about one-day candle. I really wouldn't. Big deal, new high, lower close, not a bearish engulfing candle, so nothing really significant, not a huge long upper wick. This is not the most negative candle in the world, but it still is a negative candle. And when you piece everything else together, especially the rejection of 500 average, I do wonder, is that the top in gold? Could that be the end of it? Now, we have a 2019 peak. A yearly high is always something of significance. 66.60 at the moment. We're trading below that as well. So you could, right now, I can argue that if we close below there today, and we must be closing soon, we're at 65.05 anyway. So there's very little chance of us closing above 66.60. Let's face it. That also means a rejection of a year high. Oh, hang on. We've got this year high up here as well, haven't we? 65.65. So that's the high for 2020. So we've rejected both 2019 and the 2020 high and the 500-day week moving average. I'm going to take that as a sell signal for oil. Right, dollar yen. I can also argue that the yen could top out. This is the monthly chart. Now, look, we've got the 100 month moving average at 108.73. We're trading around there at the moment. We've got the 15 month moving average at 109.15. So there's a lot going on around 109.00. And we've got this big trend line going back to 2017, which is pretty much bang on 109.00. Oh, actually, no, it's not. Coming in at 108.70. Let me just have a look at that on the weekly chart, see if it's more accurate. Weekly chart, we got the 200 week moving average at 109.00, bang on. That trend line comes in around 108.85, 90. A lot going on. Overbought on the daily chart. We really have had a good run in the dollar yen right from the word go, right from the first week of the month of the year. Or there you go. Really good run. And more recently, look at this run up in the last 2-3 weeks. Is it overextended? I guess we're going to find out, because this really is a big run and some big resistance in severely oversold conditions. Could it be that the dollar has topped, and could it be that the yen will now turn around and head up against the US dollar, and in other words, see this pair sink? I think there's a really good chance of it. Okay, that's it for a look at the charts. If you are watching this a day or two later on YouTube, after I have published it for my subscribers, then please do have a look at my website, daytradeideas.co.uk. Loads of information on there. There's an online course. There are markets for you to subscribe to, and you can get all my contact details if you need to speak to me about anything at all to do with trading or technical analysis on our Contact Us page. All very easy. Thank you very much.